Good afternoon, and today is October 16, 2023, and it's a Monday, the very first day, the very first trading day of this week. And this week is the third trading week of October. This week we have, this week and next week we have a earnings season for this quarter, so that means we expect the stock or the market's gonna move, right? And that's exactly what we are showing today, right? For the SPY, it's moved, $4.54 right there, and it's jumped about 1%, right? 1.05% today. That's a huge move. Let's see what is the volume. The huge move, but the volume is still low, right? It's 68%. So let's see what our let's trade out. So it's 1.05%, and the liquidity 68. Maybe after the markets, it will increase. But right now the volume we read right now is about 68 million share, right? For 6 million share, which is low than the average. Okay, and we see this week the earning start this week, right? Today 84, tomorrow 124, and then the whole week is going to be 833 earning report, or the company will do the earning report for the quarter. But you see next week going to be huge, 3,500, almost 3,600 company or stock gonna impact. And next week we major company in the XP on the XP 500 right there, which is SPY 500, which is the index that we are trading right there. So we have Microsoft, we have Apple, we have Amazon, we have Facebook. Or they have a new company named I think Meta. You have Visa, you have ExxonMobil, MasterCard, all kind of that. Okay, so and also this Friday we have a standard option expiration day. So basically this week and next week we have a lot of things going on. So last week we have CPIs, but this week is the earnings season coming. Okay, so look at the beautiful price action or liquidity run taking place today. Okay, just go back here, right? So we're gonna see a beautiful setup. Let's jump back a little bit right here. That's how we start. We finished last week, right? We close as 431, 85, 55 for the way. But after that, we opened the week above the close. You see that? It's the jump right here. I think it's the $1 jump right there, more than $1 jump. Oh no, $2 jump right there. From last week, it's closed on the Asian close, right, after the market, and it opened today. Look at that, it's $2. So it gives you the signal right there. So basically the market gives you some signal, and we try to detect that signal right now. All right, we try to remove all the noise and just focus on the signal. And one of the technique, in order to remove all the noise, we have to calm ourselves down, right? We have to resolve any conflict in ourselves. Basically, we have to learn to master ourselves so we can be in sync with the markets. We can be, listen to market instead of, project ourselves into the markets. because they say they are a so-called, you don't trade the market, you trade what you all believe about the markets. So that's the issue that we need to work on. We have to master ourselves. We have to empty ourselves, resolve any conflict, emotional thought in ourselves. So when we look at the markets, we look at it is, right? We insert the market instead of that. We project our emotion, our conflicts, ourselves on the markets, and that where we're not insert the markets. We will be not insert the market, and we will trade that way. We will get lost. We will lose. Our trade will not be success. But if our trade with the mindset that we are complete, empty ourselves, we will look at the market as it is, which totally, in perfect harmony with markets. Then we can see the market as it is. We can in and out, effortlessly and efficiently. That's the high level of mastery right there. That's where the beauty come from. That's where all the easy trade, low risk trade come from, effortless trade come from, and that's where we're aiming right there. So just look right here. We have the London, right? You look at how the liquidity run so beautiful, right? At first it's the opening gap, right? $2, and then the London, rate sweep the buy side liquidity, and then it sweeps the sell side liquidity, but it never closed the gap. That means it in a hurry to go up, and it's go up here, and you see that at 9:30 open, it create a order block right here. It's bullish order block, and then boom, the huge displacement, right, and create a fair value gap right there. So it gives the market tell us that it's gonna go up. However, the market's not just go up straight away, right? It have to do what? You have to trap the liquidity in order to go up. Who gonna go in here and do the buying, right? Okay, right? Because it going up, it need both sides. It need the sell side and the buy. Basically, the market maker, it want to sell high. How do you sell high? It will trap the people right here. They have to get out and buy. So buy high, right? They want people buy high, right? The market maker want to buy high up here. It want to put the price highs, but they have to find the people who are willing to buy that. And how do they do that? They trap the buy side liquidity. So that they force the people have to buy high. That's the logic, the mechanic behind the thing right there. And if we are approach market from that mindset, all of this, it make total sense to us, and we can gain the clarity right there. You see why move up and why it set a trap right here. And you see it set a beautiful trap right here, right? So go back to the order block right here, and then boom, right here is have another, but not another, but it's a bullish order block, and there's a bearish order block right here, right? And that's the short setup, right? You have order block, fair gap, right? And you have retest right there. And this guy also have retest. So both of them have retest, and after the retest, what's gonna happen? Right here, this is the signal tell you. So this right here, it make a lower high. What it tell you that it trap, it make a lower high, right? So basically it tell you that it trapped the buy side right there. And also it trapped the sell side. But look at the next move. The next move, it rate the sell side. And it never violate this order block, the bullish order block. So that give us a confidence to go long. You know why? Because we see it's trapped the buy side. So the next step is gonna take out this buy side trap. So we either go long by right here. We put a buy stop right here. As soon as we see that it rate the sell side liquidity, right, we see it rate, see it rate the sell side level. We put a we do a buy stop in here, so we get execute here at this 10:08, or we get, you know, right here at 10:09, right there we can get that's executed, and we can, you know, write on this rally up right here. But there are second entry for it right here, because look, so we identify the range right here, right? These two long and short setup. Then we put a buy stop right there. As soon as it break this, it will carry us to away. It will carry our order, and we can write on this long rally right here, or, you know, the moving up right here. And also we can put the buy stop right here, I mean the sell stop, in case it break down this range. So basically we have you know, two options. We either entry right here, or we can entry right here. Both of them can give us a win trade right there. And the targets for it gonna be what? Gonna be the prior day high, right? Which is this level around 436.46. So right here, it hit it. And you see that as soon as it hit the prior day high, okay, and you see this level, it the entry short right there, and it break to that level. It make it look like it's gonna break the level, but actually it's a forced breakout right there. So you can enter a short total short right there, and you can, you know, get a huge runs right there. And the target gonna be what? The target gonna be you see the last right here is swing high right here, so it's a bullish breaker. So we can aim for from here to here. Let's say we aim at this level right here. So $2. You see that? $2. And right here it did hit that level. And how much we reach for this trade? We only reach 39 cents, but we gain, you know, 24 cents right there. That's the beauty right there. So yeah, it's a good short setup right there. So we get the long, and then after the long we get out, we get in a short. So just two trades, we make you know, a handsome profit right there, right? So if we go in right here, how much we reach for this setup? We reach about 38 cents, right? But we go to previous day high right here, which is at this level, right? When we get out at this level, prior day high, you know, we get $2, and then this $2.70, and then we had $2.24. So we get $5 more, you know, profit right there. $5 profits to two trade on Monday. That's a wonderful right there. If we can in and out, you know, very proficient, see right there. That would be really awesome. Okay, let's drill down a little bit on this trade. setup, right? And we take a very detailed note on that trade, right? In terms of ICT language, right? We use this setup is called auto block photograph pretest long setup, right? On right here is the. So basically, this is an auto block and photograph pretest. So we can enter right here. We go in at 9:44, or we can go in at 10:07, right? 9:44. So we have a lot of options, right? Let's see what we put right here. Yeah, we can order entry right here at 9:44, right? That's the perfect entry. But if we kind of not sure, I mean, we can go in at 10:07. So the entry can pay on based on the entry time 09:47. No, 09:44. 43. So this entry is based on the ice. So basically that entry is based on the ICT concept, right? And then the entry right here, we have an entry right here also. Is that 10:06 or 10:06? So these two entries based on 10:06. Okay. Yes, that's based on that. They both based on IH's concept, right? But you have another entry right here that this entry is much better, which is based on the turtle soup setup idea. So for these two entry, we use what basic concept, right? Which is you limit order. Okay, it's based on limit order. So limit order. In this case, it's by limit order. Okay, you're gonna see different. The reason why limit order, because we put the order, the price you want to buy below the current price. So let's say we put here's our limit order at this 9:30 open. We put right there when the price still here. So it go and hit it. So our limit right there. The same idea right here. However, for this one, we put in the buy stop order. Buy stop order, which just means that we buy at the price that currently above the current price, right? When we see it going down here, we put the buy stop right there. So that's a different right there. And then we have a entry price at 10:08. Sorry, here. 7, 8, 7, not 6. So, and then we enter at 10:08 or 10:09, right? 10:08 and 10:09. So this one is based on the turtle soup, and it's gonna be a buy stop, order. So I hope that you see the difference between them. And okay, now look at why this is going to be a bullish or long trade. So the idea is that right here, right, we see this in the pre-markets. We have to form a try idea, and we anticipate which level, right, right there. So basically at night, before the markets, we see the gap right here, and then we see that at 9:30 the candle is up close above, and it above the London, right? Then we decide to go long. So that's one of the bullish signal on the trade right there. Let's look at the on the 1 minute, right? So the 1 minute give us the detail that by 10 or 10:30, if it failed to break the order block at 9:30 and it above London high, then we go long. So that's an idea right there. And the target gonna be the prior day high, all right? And also we see the condition is that, you know, $1 gap up move, you know, above $1, right? Up above $1. In this case, is $2. Yeah, there's some condition. We see that. Yes, Monday gap up, and for this trade, we name it called Monday get up, gap up long setup right there. And we also noted that there are anchor, and right here the anchor is at 9:57, and the fall breaks out candle at 10:07 right there. So basically we use this anchor and we draw this level, right? As soon as it breaks down this level, we put a buy stop there. So when it go up, it will carry us to the upside. So we never, you know, if we continue to break down, then our order will never get refilled. So we will never risk anything. So that's an idea right there. But we can put a sell stop over here, it break down the level right there. So basically this trade is very low risk trade right there. If it go up, it will carry you away. That's it. There's no way right here that you're gonna make a big move right here, either breaking down this way or that way, because everything is already light up right there. But in this case, it tells us that it just sweep the sell side liquidity, and it's gonna go up and take all this buy side liquidity trap right there. We do this analysis earlier right there. We see the logic right there, right? Because it creates huge value gap right there. That means that the market signal just that it could get ready to go up. And how it do that? It's gonna trap the buy side, and then it do the last sweep up sell side. Then it's gonna break up, go up. It creates a false sense of, you know, breakdown right there. So whoever go here and chase, you know, thought that it's gonna break down at level, and gonna break this order block, they have to pay the price, and that's the reason why it's explosive move up right there. Okay, so this trade we sum it up to a model. We're gonna build this model, and this model we're gonna call, or this setup, we generalize this setup, right? That's what we try to do. We generalize this setup, so next time any Monday we're gonna run through this setup to see if make the requirement, then we have a very high quality setup right there called Monday gap up long setup. So basically we're gonna check the pre-market condition. If the gap up above $1 move, I mean in today, right, October 16, 2023, is a $2 move. Actually it's let's see what it more than $2, $2.17, if we remember correctly. Hold on, where is 1 minute time frame right here? Okay, so $2.05. So basically for today's case is $2 move right there. But let's go with the threshold at $1 right there. That's mean a very significant move right there in the pre-market. And then we have this pattern, right? We have first the London high take out the Asia high. That means a buy side liquidity sweep right there. You have to go with the buy side sweep first. You have to go to the order, and then the London low take out the Asia low, which is a sell side liquidity sweep right there. That's the very typical pattern. When it go up, it had to rate the buy side, and then it rate the sell side, and then boom, which is the logic right here. Pattern, right? And the next condition that the price still within the priority range right there. So basically you see the priority right here, right? It is the priority high and low. So the price before it open it stay between this range, right? The high low of priority, you have to stay between this range. That exactly what happened right there. You see that? So we want the price around between right there, and we see the a signal of the bullish. Then our immediate target gonna be the priority high right there. It's gonna hit that target, and that exactly it hit today, and it stay at that level. So let's see, how tomorrow it's gonna break this level or gonna bounce back here. So, but for today trading, this target is perfect target. There's no way it makes that target. Okay, other condition, right? At 9:30 open, it had to be open above London high. And what else? I think we have one more condition, right? I think we need to add one more condition right here. So basically at 9:30 open, it opened above London high. And we have to do two conditions right here, right? Up close candle. Remember, you have to up close candle. Form on M5, which is 5 minutes, and then down close candle at 9:30 form a bullish order block, okay, on M1. That's perfect condition right there. And by 10 o'clock, it failed to break the order block form at this order block. In this case, a bullish order block from at 9:30 M1. And then we also see that the order block and the Fibonacci graph form on M1 at 9:30 open, right? In this case, it's a long setup, right? Because, yes, I think we're good to go right there. And then we check to see the the anchor candle. We have to identify the anchor candle and a false breakdown or breakout candle. And then we have to identify, and then we do entry condition, right? Which is all the condition, right? So we identify the anchor. Right here has our anchor candle right there, and we mark the low of that candle gonna be our entry level right there. We put a buy stop right there, and this is gonna be the false breakdown because it's breakdown. What's the another word for breakout right there? Because breakout of this range, right, is a false breakout of that range. This is the idea of the total sub setup right there. It not exactly telescope because it not be a low of the 20 last 20 candle, but in this case we can apply that principle right there, a force breakdown idea or setup right there. And we have to identify buy side liquidity and sell liquidity trap and sell rate right there. I think we did cover that in the previous setup. Screenshot right there. Okay, so you see the buy side liquidity trap right there, right? And then you see the sell side liquidity were rated right there. So that's the condition right there. And then we enter on the retest on our block around 10. It depends, right? It can be 10 or 10.07, so it's around 10. We want to generate the setup, so maybe next time the entry time maybe a little bit different. That's why we need the room for variation. You will never have exactly set up, right? You have a variation, but at least we capture the generalized condition. And then the target gonna be bright day high or the high time frame BD array. It can be the order block, bearish, right? Because bearish order block or bearish block breaker. I'm sorry, not block breaker, breaker block or fair value gap. In this case, we look at a 1 hour time frame. We identify the bearish order block right here, and it fit perfectly right there. It hit a level right there, and also it's the prior day high right there. So this level is target right here is very high probability. It's not gonna make this. It hit it. So let's see. Next time we see the setup, we will go all in right there. So here's some idea we review, right? We need to have a fair value graph. Just a screenshot to give a sample on the condition right there. So help us to see the picture better. Just to visualize the setup much better in our mind, in our mental image. So next time we can see the setup before forming or about forming. So we have a new week opening gap, a gap up more than $1. In this case, today is $2.05, and you see the London right here. Liquidity sweep from buy side to the sell side, and then at 9:30 open, we have an up close candle at 9:30, and it stay above London high, and then we see sort of fair value gap right after 9:30. Then we know that the buying program already reset in there. Set about to take the effect right there, so we can go in and go long. Excuse me. If we look from 15-minute time frame here, that's how the setup look like on 15-minute time frame right there. Here we got up London, right, and here's the open at 9:30 right there. And here's how it look on 1 hour time frame, 1 minute time frame. And we entry on the anchor candle right here. What else? Yeah, here's the setup right before the major move make right there. You have buy side of keyword trap, and then sell side of keyword just rated right there. And a lot of people gonna go in and chase, right? Because, oh, it's breakdown now, so it's gonna break down, right? But it's actually a forced breakdown right there. So the amateur, we used to be amateur, but we try to be professional now. So the amateur gonna go in here, and that's the reason why this move very explosive, because it trapped all this buy side liquidity right there. All the people go short here, gonna get trapped, and what they're gonna do? They're gonna buy high, and that's where the market maker going and sell high. So they make money. They buy all low right here and then they sell high. So the most safe way to play on this setup, right? Because we see both auto block fair value gap source up and then auto block fair value gap launch up. Then we boot both with both ordering. For thinker or swim platform, they don't give you order both. You have to order either this way or this way. But I think other, I haven't tried, but I saw some guys show it on YouTube, like Interactive Broker or maybe Trade Station. They can put both order at the same time. They put the buy stop right here or the sell stop right here. So we're gonna do both, right? If it break out the up range, then we can ride on an up move. But if it break down on this down down range, then we can ride on the down move also. So that is a very safe entry strategy for us right there. Anyway, we run out of time. I want to cover some other thing, but let's look at the DR model. So if you trade the DR model today, you're not gonna get anything because it's not gonna hit even the 0.5 standard deviation right there. So it's basically in the range right there. Even though it gives you the bullish signal right here, but it didn't give you much. So if you trade a setup today for the R, you're not gonna make any money. I want to look at the weekly candle real quick because there are a couple of things that we can see very interesting from the weekly candle. Okay, so right here is our weekly candle. Basically, yes, I want to delete that. So here's the level we're interested to watch, right? Here the swing high from last August, you see that? So we can trick this a fall breakout right here. So we can use this at a turtle soup entry for long right there. And look at that today. It's open this week above that. So whoever entry this go long from the fall breakout level make a lot of money now. You see the huge gap up $2 right there. So it look like bullish right now. From this setup we see right here, look like this week gonna be bullish because this is the fall breakout level right there for total soup right there. But also we want to watch this level. Right, this level is the turtle soup right here. It fall breakout on upside, you see, it go down, it retest, it go down again. So we want to watch this level to see if this week gonna come up here, right? And coincident, this level is also what commingle or in the same location with this bearish breaker right here. We're going to see how it's, interact at this level right here. That's which way put right there. But right today, for today, it's just close below this level. So interesting to see how it's going to play out at that level for this week. It gives us some trade idea right there. Yep, that's all we want to share for the weekly right there. Thank you for watching and talk to you later tomorrow. Have a wonderful evening. Bye for now.